Hey, what's up, everyone? This is Evan Carthy from evancarthy.com. Today, gonna go over real quickly the S&P 500 and the Dow Jones, maybe the Russell 2000 as well if there's time, but I don't know. Many other people trade that other than me. But anyways, starting off with S&P 500, the E-mini futures right here. Let me just scroll back out here to the old 5-minute chart. So what we're looking at right here is going back a couple of days right here. You can see starting way down here, 0, 1, 2, 3, 4, 5, extension of the 5 right here. Price the other day, it came down and completed it, hit the 38% retracement level right there. So that 5-wave move is over right there. And ever since then, I deleted the stuff that was from here the other day, but like from today, you can see there's a 0, 1, 2, 3, 4, 5, and another one. Let me go down to the 1-minute chart to show you what it looks like a little bit more clearly. So you can see right here, 0, 1, 2, 3, 4, 5, and then another one starts up right here, 0, 1, 2, 3, 4. There's a target box, it's at 5. Comes up there and hits the 30% retracement box. So it completed both those right there and then just started running back up. And then you have another one over here, 0, 1, 2, 3, 4, 5, yada, yada, yada. And so ever since then, actually from this high up here though, let me go back to the 5-minute chart. What's been happening is it's just been real technical trading that has kept on pushing it down. So starting up here, right there, just going down here, I just want to show you what the market's doing right now. So you start up here, and we're just going to leave this as the anchor point high for this whole move right here, because this thing has just been the high that's holding everything or making it go lower. So using this high, using this low, see price came back up, hit the 30% Fibonacci retracement level, came down here and hit the target area box between the 1.416 and 1.272 Fibonacci extension level. So then we just draw that extension low down right there, Fibonacci retracement low. Price comes back up, hits a 61.8, goes a little bit higher than I'd like, but it's fine. Hits 61.8, bounce off that, comes down, hits the target area here again. So then we just keep on drawing it lower until the price comes back up and hits the 38% line, which is this orange line right here that locks it in. So there we go. Comes down, doesn't hit the target, bounce back up, then hits a target down here, and we're just going to keep on doing this until we can't do it anymore, because that is exactly what has been happening the past several days. Price goes back up, hits the 30% line, hits the target down here, use that for the low right there, price goes back up, hits 38%, all the way on to 61.8, and then finally comes down at the end of today and hits the target area right down here. And so going into, I guess, today's trading session or tomorrow's trading session right here, what I'm expecting is, obviously I don't know how much lower price is going to go down right here. It could be low right here, maybe it's not. But what I am looking for is price to eventually retrace back up, depending if this remains the low right here at about 34.64. If it goes lower, just keep on dragging it down lower. But let's just say for all intents and purposes, this is the low. So I'm expecting price tomorrow to go back up to at least 34.93.50, and then if it continues with its same movement that it has been doing, coming down and hitting this target area at minimum around here at 34.52 and 75 cents. Again, this assumes that this is going to be the low that holds on to it, the pivot point low right here, before price retraces back up to at least right here. Now, obviously it can retrace up higher, but that is the minimum I'm looking for it to trace up to. So it's about a good almost 30-point move from where it currently is. And then if it does somewhere, up between the 38 to 61.8 box right in there, looking for price to continue its move down lower and hit that right down here at about 34.52ish. So yeah, that's the setup we're looking for going into tomorrow. If it continues, the only reason why we're looking for that, because that is obviously what it has been doing for the past several days. So it's just been a real technical type of setup, just a march down. So when it stops, who knows? But that's what we're looking for going into tomorrow's trading session. Now for the Dow Jones, again, it's pretty much the same thing that the S&P 500 is doing. I won't spend as much time showing you the same thing, but as you can see, like pivot point up, down, hit the target, using that pivot point high, pivot point low, hits between 38% around the 61.8 box over there. There he goes down here now, hits the target, so we just keep on drawing it lower. There it goes right there, hits up there, 61.8, and then at the end of, or not the end, but the trading today went down and hit that target as well. So we just keep on drawing it lower. Still hasn't gone up, hit the 38%. So same thing for the Dow Jones as in the S&P 500 is we're just looking for price to eventually retrace back up somewhere in between the 38 and the 61.8% level right there. And then if it's going to continue its downtrend, looking for the target to be at least 28,213, depending on if this remains the current low for it as well. Obviously, if this keeps on moving down lower, then this would make the target area lower down there as well. But anyways, so Dow Jones and the S&P 500 are both kind of set up along the same ways. As you can see, there's still opportunities to trade it. Based upon how I trade this 5-way move here. And basically what I do is I look for is price to break out of here, go long, take it up to the bottom of the red line right there. And then if the price does, this one didn't, but if the price, say it breaks out like right there, and that's the high, and then it just starts retracing. Normally I would get in where it breaks out right there and then look to get in probably around either the 50% or the 61.8 and then also the 78.6, and then my stop loss, this is just something I just started doing for it, is having a stop loss just below this previous low right here. There have been plenty of times, you know, it'd come down and then reverse back up, but just I've been burned too many times. The price just retracing way too low without a stop loss. So just take my licks and look for the next trade for it right there. But so that's that, and then we'll look at a little bit more of a long term for it, because been going back and adjusting these 5-way moves again to make sure they fit, because kind of everything goes for this long-term chart for the S&P 500. If it fits in here, then I know the setups that I have or I've been working on, trying to perfect them for what works for me, that work on the other charts. And so based upon this big move that started down here back in March of 2009, you can see you have the 0, 1, 2, 3, 4 extension of the fifth wave up here, move up there. Price came down here, traced enough to fulfill it, and as you can see, using the second point down there, came down and hit putting the 38 in the 50 box, and now it's been going up ever since. But another thing to note is one thing that I am looking at doing, I haven't figured it out yet, but this will be a new trade that I will start utilizing, but I'm still researching it, figuring out the best way to trade it, is after you get a 5-way move here completed, see 0, 1, 2, 3, 4, 5. Price came down here and hit in between that blue box. That's just the 38% and 50%, measuring it from the second point right here to the fifth point up there. Let me delete this longer one over there so it's a little bit easier to see. See, price came down there and hit that. So that means that that 5-wave move is complete enough right there. But what I'm looking at doing is not just for that being complete, but taking it down here to the 0 point, and so then when price comes down and hits into the 30%, even though it's already been completed in it, would I go long right there and look for the target to be up right here, which is the 1.416 Fibonacci extension level, as you can see right there at about 3,800, or do you start looking to take it the other way, short the other way? But for this one right here, because it's really, those are the only two options that happen from just about every single time. Oh, excuse me, there are 3 options from every single time these 5-way moves get completed. One, the price retraces low enough for the overall 30, at least for the 38% move, somewhere between the 38% and 61.8 box to get support, and price goes back up and hits its target area up there. Or the price, when it comes off of this 5-way move, it does bounce off between the 38 and the 61.8 box, but what it's doing is starting a direction the other way. And let me just draw a little arrow what I'm talking about. Like, say it comes down right there, retraces back up, which would be enough for that move right there, say between the 50 and the 61.8, and it starts a new trend down here the other way. And then the third way that I've noticed is sometimes it doesn't go down low enough to the overall 38% retracement level. It just hits the one from the second point, which is enough the way I trade for it to complete it, and then moves on back up. But those are two ways I'm looking, trying to figure out how to filter them best to provide the most profit. So assuming that this is what we're in right now, which does make it look so, using this as the pivot point low, this pivot point high, price came down, hit the 30% line, has bounced back off of it. Target we have for that move is around 3,800 for it. So with the S&P currently around, what's that, 3469, we still have, over 300 points, assuming that is going to be the target for it to go up there and get hit for it right there. If we go down to the daily chart over here, you can see we had right here 0, 1, 2, 3, 4, 5. Price came back down only enough though, using the second point to the fifth point to hit it, barely take off of there. And if you take it down to the 0 point down here, you can see price didn't come down there and hit it. So but it's enough for it to come and complete it. And ever since then, it was looking like there was going to be a potential 0, 1, 2, 3, 4, 5. But as you can see, when the price came back down and broke the blue line, which is the 0% line right there, that nullified it, because that's just one of the Fibonacci rules is the wave from 0, 1, 2, 3, the fourth wave can't break down into the 0 to 1 wave right there. So ever since that happened, just draw it right back up there here to the top. You can see price has broken out, and so it's looking like for what that setup's going to be is just like your X, A, B kind of C move up there. Yeah, right there. Down to right there, and then it's looking like it's going to go up and hit the target about 3709. Not guaranteed to, but that's the current setup is looking like, and so I'm just waiting to see what's going to happen for it right now, because right now it's kind of in no man's land for it. And then for the Dow Jones, a little bit different setup for it right here is, in fact, I'm not going to go over this right now because I need to go back and readjust some of the stuff. But it's currently in a 5-way move, or has just completed it. Again, I haven't gone back and completely gone over it yet, but I'll go do that here tomorrow. But anyways, that's the S&P 500 for looking forward to tomorrow. Again, looking for some type of move back up, and then if the downtrend continues, it's going to hit somewhere between, allegedly right now, if that is the pivot point low, that's going to stay. Price will trace back up in between about 34.93 to somewhere about 35.10, 35.15ish. Then the target we're looking for tomorrow would be about 34.53, and then same type of move for the Dow Jones as well. So all right, be safe out there, and talk to you later. Bye.